Depending on the source of the info you are seeing, the mortgage rate quoted is often not a current rate. Well, what does that mean exactly? Mortgage rates are a lot like purchasing any other financial investment, stocks, bonds, and mutual funds. Those investments change prices throughout the day and often hour to hour. News events during a day can impact the movement of a stock price, and the same is true for mortgage rates. Let's take a deeper look at the mechanics. First, mortgage rates are based off of mortgage-backed security bonds, or MBS. The movement of these bonds impacts whether rates open up higher or lower from the previous day and any changes throughout that day. MBS are what is used for mortgage rates for all lenders and for all loan programs. While it can be difficult to track MBS movement throughout the day unless you have a paid service, which I do, consumers can track the 10-year Treasury bond instead, which, while not exact, typically shows the same trend lines as MBS pricing. The 10-year Treasury can be watched on channels like CNBC's Ticker every day during the business day. As bond yields go up, mortgage rates also follow that trend and increase as well. If you look back to the all-time lowest mortgage rates back in 2020 and 2021, not that long ago, the 10-year was pricing around only 0.4 basis points. And in 2022 reached a high of 3.4 basis points and currently is closer to 3.0. So you can see the huge increase we've seen. This is reflective of the rise to mortgage rates we've seen from the lows in the high twos last year to over 6% earlier this summer, now settling back into the mid fives late summer. The key is the source of the data you're looking at when it comes to mortgage rates. Most news sources on TV or print use the weekly Freddie Mac Primary Mortgage Market Survey, PMMS. While very accurate and obviously from a very reputable source, this data is only released every week, every Thursday, once a week. The data is reported from lenders across the country, typically using rates that they submit from the prior Friday or that week's Monday. So by the time you see it on Thursday, the rates could have changed significantly from that report. That's the key thing to remember when you're seeing the rates quoted on the news, where in comparison, as I had mentioned on CNBC, they quote the actual daily ending rates each day. So they're much more accurate to the current market than the weekly survey. The other thing I want to point out when you're comparing rates is to make sure that you are looking at the actual loan costs. And I'm not talking about things like title company fees and recording fees or homeowners insurance, property taxes. Those are all going to be the same regardless of the lender, regardless of the rate that you lock at. Those are independent of the mortgage. What's important to remember and what can affect the rate significantly is the loan costs. Those can include things such as origination fees, underwriting fees, discount points, or just points. Those costs affect the rate, whether it's higher or lower. The more a borrower pays in points, the lower the rate. The less they pay, the higher the rate. So be careful when you're looking at an advertisement that's quoting a really low rate and you see the APR, the annual percentage rate, a lot higher than that actual rate. That's a big tip-off that they're quoting a rate including a lot of discount points, which means a lot more money out of your pocket just to get that lower rate. And that may not be what's you're really in your best interests. So pay attention to the source of the data that's quoting it and pay attention to the cost of that loan when you're comparing offers from multiple lenders. I'm happy to do the same for you and provide you an updated estimate on your quote to make sure that you are getting the best deal. I'm always here to help, and I look forward to speaking with you soon. Have a terrific day.